Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Now, my two co-hosts, Mark Hanf and Nam Phan, are off today, but we do have a special guest who will be coming on in just a minute. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Check them out. Today's trivia theme is miscellaneous trivia. Our special guest is real estate attorney and friend, Spencer Scheer. Spencer, you've been on the show a few times before. Welcome back to The Best of Investing.
I have been. Thanks for having me back again. Appreciate it.
Absolutely. Our pleasure. My pleasure. So you are quite the expert in real estate, being an attorney, and there's a bunch of stuff that we want to cover because I know the audience would love to hear. Let's start off with the first thing you mentioned here when you sent me a list was economic issues, inflation versus deflation, the most important issue facing investors.
Yes, we have a podcast. We put that out. I think this is the most important issue facing investors. At this point, you've got a war going on where people, many people, in fact, most pundits, economists, financial advisors are screaming about inflation or stagflation. And yet there's a sizable minority of the same that are arguing for deflation. And I think whoever wins this battle is going to be played out, in a variety of different arenas, but the residential real estate market and then the commercial real estate market likely as well are going to be affected by this. And how you play it, I think, is going to be critical, whether you're a homeowner or you're an investor.
I think
so if you want to go into
Yeah, I was going to say that, to me, deflation would be just awful. I think a little bit of inflation always seems to be good for a good economy, nothing crazy, but, 3%, 5% growth. What happens when you see deflation? That just seems like an economic crisis, really.
Right, but we may be having a slight redux of this, but think of the mortgage meltdown, 2009. We were exporting our loans worldwide, selling paper and yield all around, and anybody who could fog a mirror got a loan, and the residential market in particular got pumped up to the point where it was an overinflated bubble that eventually burst. The deflation that happened was a result of there being just unsustainable. There's a hole in the economic balloon. It was unsustainable to keep those prices that high. And the governments tried to intervene to slow down the rates of foreclosures, but notwithstanding, you had a significant bout of deflation. And if they didn't come back in again, keeping QE in play big time, artificially low rates, you probably would have had an even greater deflation in the real estate bubble.
This time's a little different because of the clampdown with Dodd-Frank, with ability to repay and certain restrictions versus, like you said before, anybody who could fog a mirror could get a loan. So is it going to be a little bit more of just strictly supply and demand and unemployment versus employment? That's going to create it?
That's a great point. I agree. The dynamics have changed, but they changed, in my opinion, for this reason. Is that, yes, they were trying to shore up the banking system with Dodd-Frank and too big to fail and all the things they did to shore up the system, and that would probably have made a more stable real estate market, although I still think there might have been some deflation. But then COVID changed it all. So in essence, the governments of the world, because they were freaked out, they put the world economy to sleep. They closed down the economy for a year and sent checks to everybody. So what does that mean? Does that mean it's sustainable forever? No. What I say, and that's part of the reason I think there might be some deflation, is not only do you have all the stimulus checks going on and all the exacerbation of the financial conditions because of somewhat of unfettered money, but you've got hidden stimulus now as well. You've got billions and billions of dollars of mortgage loans that have been deferred, forbearance payments stuck on the end of the loan, rent payments that have been deferred. And again, Realty Track did a bunch of statistics showing that you had about 9 million people participating in the mortgage forbearance programs, and there was billions, over, I think, 25 billion of delinquent rent. And now these are being released back into the system. And again, Realty Track thinks that all but about 16% have either resolved their issues or they're in forbearance agreements or whatever. About 16% aren't. And if all that 16% were to hit the foreclosure market, you'd have maybe about another 300 or 400,000 foreclosures. And Realty Track's answer to that, saying why there won't be deflation and a crash like there was before, was because they think that there's now equity in homes so that people will be able to sell their homes and avoid, a downward spiral in the real estate market. But that's one reason why a lot of people think the market will stay up. The converse is both because of either unemployment, diminishment in Asian economy demand, or because there is a rush to get out of the real estate market. If there's a lot of defaults, there is a substantial chance you may see deflation.
Interesting. I tell you what, we're going to cut to our first commercial break. Good stuff, Spencer Scheer. Miscellaneous trivia is our theme. Here's our first trivia question. How many times are traditional Mexican refried beans fried? That's our trivia question. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Also want to make a mention here for the Tahoe Lakeshore Lodge and Spa, which provides guests with an all-lake hotel, a lakefront, hotel in South Lake Tahoe, which, by the way, they're still open, did not get affected by the fires. And every lodge room and condominium has a view of the lake and mountains. And guests can relax or play on over 500 feet of private beach and enjoy a dip in the outdoor heated pool and hot tub that are also lakeside. Check them out at www.tahoelakeshorelodge.com. Stay with us. You are listening to The Best of Investing. Edward Brown here, along with our special guest, real estate attorney Spencer Scheer. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host. Mark Honf and Nam Fon are off today, but our special guest, Spencer Scheer, is on our Zoom call. First trivia question was, how many times are traditional Mexican refried beans fried? Spencer, what do you think the answer is?
I think the answer is, and again, I'm guessing, never.
Oh, no, no, actually, I mean, I would have thought it would have been twice, but actually it's only once. That's only, they call them refried, even though it's only once. I think interesting. Okay. All right. So, Spencer, continue on. Before you continue on, so you are a real estate attorney practicing primarily in Marin. What areas do you cover besides Marin?
Yeah, I'm the managing partner of Scheer Law Group. We have two offices. I'm in Marin County, and my son Josh. We have to breed attorneys to keep him. Runs our Orange County office.
In Orange
County, we represent.
Good.
I'm sorry. Go ahead.
No, and so you have up and down Northern California, Northern and Southern California.
Yeah.
And how do people get a hold of you if they have real estate questions for law?
You can find us. Google us, SCHEER Law Group. And again, you can check us our podcast as well. It's called Truth Serum, and you'll find out information like this on a regular basis. But we're easy to find if you want to find us. Okay,
very good. And Spencer does have a very good reputation in the industry, so I can vouch for him on that. All right, there was something else you wanted to mention when we were talking about the unemployment or the stock market with regard to the values of real estate.
Yeah, and again, I think it's inflation versus deflation is going to be the primary factor for investors, especially real estate investors. The argument again for deflation is advanced by people like A. Gary Schilling, almost a prescient economist who's been right for about 20 years, Stephen Van Meter, other people like that. They argue that the weakening economy and especially the weakening demand from Asian economies and unemployment in the U.S. Is going to play out to force rates even lower than they are now and will result in somewhat of a deflation of residential real estate in particular. But one proxy battle I think that illustrates this, if you wanted to see it like a Nintendo game to see how inflation is doing versus deflation, is you look at the stock market. I mean, again, I think anecdotally, all consumers and especially economists and financial advisors are yelling and screaming, all prices are going up and the money is being flooded into the market. And there's just so much money, they're printing it like, one-arm paper hangers. But guys like Stephen Van Meter are saying no, that yes, there's a tremendous amount of bonds and T-bills being printed, but the Fed is recirculating those in what he calls a money prison that goes from the large commercial banks to each other, but doesn't get out into the system. And the commercial banks have a balance sheet, meaning they have all these savings accounts they're paying almost nothing on, but they've got to pay something. And in order to have assets to pay that, they do these short-term repo note swaps with the Fed to be able to buy these T-bills that are being bought by the Fed to pay their borrowers virtually nothing, and they swap them back to the Fed. And it's just a circular money prison in accordance with Van Meter, who's saying that therefore the money isn't getting out into the world and being spent like drunken sailors. It's being kept in the system.
Yeah.
And therefore you've got
but from an investor standpoint, everything is based on alternatives. And so if they can put money in a bank CD at 0.0001%, even though it's considered safe, a lot of them are saying, gosh, I'm missing the boat. The market at least should produce a 5 or 10% return based on what we're seeing. And I think that's why a lot of money gets poured into the market.
Yes. Okay. That's a great point. So let's finish this one off, and I think it'll illustrate the whole thing. So yes, so money's pouring in the stock market. I agree. But then when you're looking at what's going on in the market is it's going nuts. But yet bond yields, 20-year bond yields, 30-year bond yields are at like 2%. Treasury bills at 1.3%. Why would these rates be so low if you're going to see intense inflation and stagflation? They should be like the 1980s, where they should be going up to 10, 12, 14%. But they're not, because, again, people say the bond market's wise, the stock market is foolish. The stock market's having a great laugh now, but the tension being played out. Commodity prices were going way up. Everybody thought they're going to skyrocket, and they've nosed down a little bit. But bond yields have stayed in a very low range, which indicates either low or no economic growth. So that's a proxy for the inflation deflation.
Well, yeah, because if the Fed starts, I think Powell said he's not going to raise rates probably until next year. But I mean, there's a danger in raising interest rates. But I think a big danger. That'll just kill the economy. Because again, everyone's house prices and mortgages will go up. That they have to, a new loan. I mean, I think I could see that causing deflation if they raise rates. So
yes, and again, the proxy battle between stocks and bonds, I think, plays out. Watch it. You'll see. It's amazing how it's just going back and forth now.
Let's see here. What else? You had some other things that we wanted to cover here. You had here 20. Your Realty Track was what you're mentioning here. Has noted 9 million total participated in the foreclosure forbearance. 23% exited and paid current and never missed a payment, even though they could have had a forbearance. We've talked about this before, that people that have forbearance, it doesn't necessarily hit the credit report, but it kind of does because it's reported as a memo. So even if your credit score stays up, Mr. Banker is going to look at that and go, well, wait a minute, hold on, folks. You asked for forbearance on the last lender. How do we know you're not going to do that for us? And so
that's a good point. A converse on that point is, I think, Fannie and Freddie now are putting in their underwriting guidelines. They're going to note renters who did pay versus those who didn't in terms of their underwriting guidelines, meaning that you could have had rent forbearance, but if you could have had it and yet instead you continued to pay rent, that's going to be a factor that will increase your mortgage underwriting scores going forward.
Years ago, I was talking to my banker, and he said that he had a guy repay $500,000 of a forgiven loan just because he realized how much it was going to affect him in the future, because the main question comes up, have you ever had a loan forgiven? And if he would have said yes, it would have devastated his business for the future. It was worth him paying $500,000 that he didn't have to pay. I think it must have been $1 billion worth of, because who wants to pay $500,000 if you don't need to?
That's true.
Okay. And then you have to hear, let's see here. We're going to cut to break in about 30 seconds. So when we come back, we'll talk about some evictions. You have here Goldman Sachs study of more than 1,100 small businesses. Like to hear the result of that one. Okay. So you ready for our second trivia question here? All right. So far you're batting 0. I don't like that. If you get this one, you'll be batting 500, and that'll get you in the Hall of Fame. What was pictured on the face of the U.S. penny just prior to Abraham Lincoln? So Abraham Lincoln's on the face of the penny, right? What was pictured on the face of the U.S. penny just before Abraham Lincoln? No looking it up on Google there, my friend. All right. I saw you. Oh, you're just writing. Okay. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. I'm going to ask this one more time. So again, we're not talking about the tails side where it went from the wheat. They call it a wheat penny, right? We're wondering on the front of what was on the front, the picture What was pictured on the face of the U.S. penny just prior to Abraham Lincoln? All right, 888-912-1190. First caller with correct answer is going to win that tanning certificate. Stay with us. When we come back, we're going to ask Spencer just a couple more questions. You're not going to want to miss the rest of this show. Stay tuned. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with my special guest, Spencer Scheer, real estate attorney. Second trivia question. What was pictured on the face of the U.S. penny just prior to Abraham Lincoln?
Yeah, I think you're not going to like my answers. The first two things that came to mind were either a buffalo or the likeness of Richard Nixon.
Yeah, Richard Nixon. No. And the buffalo, that would have been the nickel. No, it was an Indian head or Native American.
Oh, was it?
Yeah. So, all right. Okay. Now the next one I know you're going to get, and that'll make you bat 333, which will still get you in the Hall of Fame. All right. So, Spencer, you were going to mention on the air about a Goldman Sachs study of more than 1,100 businesses. What did that reveal?
Well, again, that's more towards the idea of whether if you support the idea that there might be a weakening economy and possibly deflation. Goldman Sachs, they did a study of 1,100 small businesses, and they revealed that almost half of them, 44% of them, had less than 3 months of cash reserves. So leaving them vulnerable to further closures and shutdowns if there's either another COVID variant resurgence or financial emergency. So you're seeing that notwithstanding that they've pumped the financial asset balloon way up, there's still a hole in it, and likely the possibility of more damage unless you really do have a strong economy.
Pretty tough. And then you had here SLG seeing extreme speculation and leveraging in real estate development. What does SLG stand for?
That's our firm, Scheer Law Group.
I was going to say, I thought that was, I think that's your firm, but I didn't want to just assume that. So there's extreme speculation in leveraging in real estate development, with many development projects assuming continued real estate inflation. Banks down as a result of workouts and forbearance, calm before the storm. Why don't you talk about that a little bit?
Yeah, and again, I'm speaking anecdotally. I mean, we deal with, again, we represent primarily lenders, landlords, and investors, a lot of it in real estate. But, the real estate default rate has gone down significantly. And of course, the reason is because the governments have been extending forbearance and loan relief at record rates, never before seen like this. And it's created a fair amount of speculation that is dependent on the prices staying up. And maybe they will, but I'm seeing, again, anecdotally, I represent lenders all the way from institutional lenders down to what I would call hard money lenders. And people are taking a lot more risk now, believing that the residential real estate market's a gold mine that'll never go down. And that might be true.
How much of it is that? And also how much of it is they also need a place to place their money? And so they're looking for places to invest or lend, and it's getting slim pickings or competition.
Absolutely true. There are, again, real estate, especially if you're investing, whether it's a REIT or investing in a fund or directly, it is one of the better places to get yield and return. Yeah. But again, the question is risk reward and inflation deflation. If there's inflation that continues on, then best investment you can make. If it's not, the broken clock's right twice a day. But a guy named Gary Shilling, worth watching, he wrote a book called The Age of Deleveraging, and he's been almost prophetic in the fact that he still thinks you got another leg down, certainly on bond yields, and that there's going to be not a crash like you had in 2009, but a significant residential real estate adjustment. And I go by Gary. He's been right as rain for many years.
Well, I know like Pacific Private Money has been lowering the rates they're charging borrowers because of competition. Where they used to charge 9%, they're having to lower it to closer to 8%. So, it's you get too many people in the market, and you don't get to charge whatever you want anymore. Which competition is good for free marketplace. You had mentioned.
I want to hear one.
Yes,
one
please.
more quick anecdotal story, because just to show you the competition, is I had one lender, again, an institutional lender, and they're thinking of buying into, there's now companies that are undercutting credit cards. So they're saying, look, instead of you buying a credit card and having these crazy default rates, we'll load you into credit cards that basically give you reduced rates as you pay continuously, so that instead of paying 18, 19%, you may pay 8 or 9% on the credit card. And institutional lenders are thinking of buying this debt or these loans. And again, you're right. The competition is intense.
I think, that generally I kind of like that because it's good for the consumer. So as you prove yourself, you can pay, let's say 8 or 9% on the credit card. And then from an institutional investor standpoint, you're showing them, hey, here's a proven track record of this credit card holder who is willing to pay 8 or 9%, but at least they're consistent. Isn't that kind of what's going on? Because
yes,
go ahead.
I was going to say, yes, that's true. It's a good concept. Although the converse is some of these guys are buying credit card debt. I mean, the idea that an institutional lender would be buying credit card debt that's being in effect refinanced, that would be something the highest speculators, not a financial institution, right?
Which is kind of interesting because, if somebody is having a hard time paying 18 or 19%, I don't know what their monthly payment is, but if they're suddenly now given a grace of 8%, maybe they can afford it. But it's unsecured debt. And as a lender myself, I don't like unsecured debt. I would not give Warren Buffett or Bill Gates or Jeff Bezos an unsecured loan. There's just, I want hard assets. I wouldn't do I don't like a car loan because it can get driven away. I like real estate because it ain't going anywhere. You got, potential earthquakes and all that kind of stuff. But for the most part, the real estate's going to be there. I do want to talk about this last issue about evictions. We can start on it, and then we got to cut to another break, and then we'll continue on when we come back. So you say here, no national eviction moratorium. The CDC mandate struck down. What's the CDC have to do with evictions?
Thank you for saying that, because it's all about whether or not some of the COVID results were some of the biggest overreaches by every governmental institution.
Yes, you're right. What does the Department of Agriculture, what do they say? And exactly. Department of Transportation, well, we don't want to hear from them about it, but go ahead.
Yeah, you're right. But COVID-19 was like nothing. The fear, again, now it's in hindsight, we'll see we probably did more economic harm to ourselves than we did medical, even though it is catastrophic in its own right. But
and the CDC let me just interrupt on that because we're going to cut to a break and continue on there. But that's one of the things we've talked about for a while is how much medical damage has it done by shutting people down. From the standpoint of there's more suicides, there's more depression, more drinking. It's funny. People thought, with COVID, you're going to get a lot of birth rates because, people got at home, but no, it doesn't make people in the mood. And then it's actually birth rates have gone down. So
what a game changer,
Dr. Scheer, we're going to need your advice on that. Okay. Here's our third trivia question we're going to cut to. How many tablespoons are in a cup? Typical cup, okay. Yeah, you got to go back to your math on that one. 888-912-1190. First caller with the correct answer is going to win that tanning certificate. How many tablespoons are in a cup? And by the way, that certificate's worth $100, so it's worth calling in. Stay with us. Best of Investing. We'll be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with our special guest, Spencer Scheer. Spencer, how many tablespoons are in a cup?
Oh, no. How about this? I'll say more than 8 and less than 20.
That is correct. More than 8 and less than 20. Now, if you have to narrow it down, what would you say?
More than 8 and less than 15.
No, it's 16.
All right.
Yeah. All right. Well, we'll get you back on and we'll get your batting average back up again. All right. Let's talk about evictions for a minute. I'll let you just take it from here.
I'll just run through a little bit of the grid. It'd just be worthwhile to know, especially if you're a residential or commercial landlord. But the CDC had somewhat of a national eviction moratorium. Again, it was primarily affecting federally backed mortgages or federally backed loans and federally backed institutions. But the mandate was struck down by the Supreme Court, so there is no more eviction mandate in place by the CDC or anybody else. However, Representative Cori Bush just introduced a bill to extend a new moratorium through the end of the pandemic, however long that will be.
Well, okay, so let me ask you about this because I've mentioned this on the show that you hadn't heard before. instead of giving people just free money so that they don't have to go to work, why wouldn't they just give that money to the landlords? Because landlords, it's not their fault for having to have people in there who aren't paying rent. All you're doing is just shifting the problem to them. You know, if at least you give the money to the landlords, the rent is paid, and then you're not burdening the landlords with that because they just kind of being the fall guy.
Well, that's a good point, but I mean, I guess the sociology or the politics of being able to do that to get people to suddenly give money to landlords and everybody else would be screaming and yelling, "How do I pay my rent?" I think that's probably in hindsight that would have been the best way
No,
to
but that's the
go.
thing, though. Is
And
how do they pay their rent? They pay the rent with that money, right?
yeah,
I mean,
but what they ended up,
good.
I say what they ended up doing is they finally gave the money, billions and billions to the states. It's been slow to be dispersed, and a lot of people who could have paid their rent didn't. And but you're right. Looking back, that would have been a much better and more efficient way to do it, but it never happened.
Okay, good.
It didn't happen initially, anyways.
Yep.
So just a real run through quickly, so people might know. So Fannie Mae and Freddie Mac have limited their evictions through September of this year, with some limited exceptions, like if the property's vacant. There's a lot of state and local restrictions that continue in effect. So if you're a landlord not being paid and you want to evict your tenant, with rare exception, you've got to go through local and state restrictions. You got to find out what that is. A recent San Francisco law made a presumption regarding commercial rent, saying in essence that if you're a landlord and your commercial tenant wasn't paying, but the rent became due honor of March 16th, 2020, they're now putting a presumption in effect that if you were prohibited somehow from operating by any state, local, or federal mandate during that time, that the terms in which you entered into the lease were not being fulfilled. It was a mutual excuse for paying rent, and they give you a presumption that your rent is forgiven. So you got to take an aim at that.
Whoa.
And then one last case that might be worth noting. The recent case came out of Duncan versus Kahigi, which is California Court of Appeals First District. Came out in August 2021, and a lot of landlords becoming very frustrated with tenants who either weren't paying or seeking to get rid of tenants who couldn't pay and put them in with high-paying tenants, took actions in their own hands. This case is a wonderful example of where courts will punish landlords if they find that landlords overreached. And in this case, tenants alleged they were being terrorized by various actions, including ignoring and delaying response to maintenance and upkeep issues, removing recycling bins for accumulating trash, serving notices that were confusing or dictatorial. Eventually, they awarded, I think it was $2.3 or $2.7 million in punishment damages against the landlord. So, however it goes, landlords beware.
Wow. That's a little, yeah. And then I noticed one other comment here. You had said intermittent discontinuation of PG&E services to the actions of the landlord. Yeah, you can't just kind of pull the plug on that stuff, you know? In fact, it's funny, years ago, after my dad died, my mom, we didn't have enough money. So my mom rented out rooms in the house, very similar like Forrest Gump when he was a kid.
Yeah.
And there was this one guy who basically decided he wasn't going to pay rent for whatever reason. He paid for a couple of months and then he just basically started to squat. And my brother, not knowing any laws or anything, said, you know what? I don't like that. So he took off the door so that the guy wouldn't have any privacy. That didn't go over well.
Self-help.
Self-help, yeah. And it's like, but I get the frustration of the landlords. It's like, I mean, it's one thing if somebody really can't pay because they can't pay. It's another thing for people to just yell the word COVID and suddenly they don't have to, I don't have to pay. I just yelled the word COVID. It's like, well, wait a minute. You got to show us why you're affected by COVID. You can't just yell COVID. I mean, there are people who, let's say if they're on a fixed income, well, okay, you're on a fixed income, Social Security, your pension, blah, blah. That probably wasn't affected at all by COVID. It's the guys who were out there working at a restaurant who got fired because the restaurant couldn't hold them anymore, couldn't employ them any longer, and they weren't employable, for too many other positions. That's more legitimate, or a restaurant owner. But sometimes, I'm not trying to take advantage of elderly people, but it's amazing how people try to take advantage of the system.
Oh, I'm with you. I mean, the dynamics change now from whether it's self-reliance or community reliance, church reliance, whatever, so that the government's going to save us all. And you're right. People can scream and you know, the attention you get sometimes, it will far eclipse the need or the merit of your claim. I agree.
Yeah. So Spencer, before we let you go, we want to make sure that people know how to get a hold of you if they have any questions. Give
Great,
us
thank you.
your phone number and your email address.
Yes, first, getting a hold of us, 415-491-8900, and then my extension is 105. You can leave a message. Somebody will get back to you. But best way to find out about our firm is go to www.scheerlawgroup.org, and again, listen to our podcast, which is Truth Serum. You can find it on Apple, Spotify, whatever. Truth Serum by Scheer Law Group.
How'd you get that name, Truth Serum? How'd you come up with that?
You know, I'm a truth seeker. That's it. If I believe in something, I go for it with both hands and, you know, nail and tongs as well. But I want to put something on that is, you know, truthful in terms of the presentation, but also seeks after truth in various issues. We do a social segment as well, always interesting and somewhat controversial, but I love it. It's a labor of love.
So that's Truth Serum. Hey, by the way, you were quite the musician with Factor 11. I remember. Did you guys still performing?
Yeah, you're being kind. I mean, we struggled hard to be average. We're still performing. We had a soon-to-be famous song called "Good Looking People Drink Wine and Bad Looking People Drink Beer." But you can see us up in Marin County. We're still plugging along.
All right. We don't have a trivia question, but again, as always, we've had you on a couple of times. Going to have you on some more, a wealth of information and knowledge about real estate law. So again, get in touch with Spencer. And you do handle both. I mean, primarily you are working from the lender's standpoint. Do you also represent borrowers?
You know, with very rare exception, no, I've taken a couple of cases on pro bono, one I'll live to regret and one I'm glad I did, but almost always on the lender investor side, landlords as well.
Gotcha. All right. Again, Spencer, thank you very much. I know you've got to take off. You were kind enough to bless us with all the segments of today's show. So
thanks every year, gentlemen. Great to talk to you and see you again.
All right, my friend. Thank you. All right. Stay with us.
Welcome.
The Best of Investing will be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown. Our good friend and real estate attorney Spencer Scheer had to take off, but I got to do this a solo now for the next 4 minutes and 15 seconds before we give our famous thoughts for the day and our closeout, as they say. So Pacific Private Money, a great place to get a loan if your bank says no, or if you don't have enough time, because they can make loans very, very quickly. The whole idea that they're doing nowadays is their short-term consumer bridge loans. So they're owner occupied. Generally speaking, you've got somebody who owns a house, but they don't want to sell their house until they buy something else. Bank says, wait a minute, we don't want you to own two houses. You got to sell the other one first. You have a loan on it. Well, at Pacific Private Money, you can purchase the new house if you have a decent down payment, or you don't even need that if you have enough equity in your old house, because they'll do what they call cross collateralization. And they'll take either a first or a second on your current house and then make you a first mortgage on the new house. And then you just refinance them back at any time within 11 months with a loan from a quote real bank where the rates will be much more favorable. So even though their rates are going to be more expensive than the bank, you'll actually save some money because you don't have to move twice, put your stuff in storage. You'll have some time to fix up your property, which usually means that you'll get more for it. And if your property is slowly increasing, like the market has been, then you don't want to sell it right away. You want to sell it in a few months. So that's a good way to get a loan for purchasing your next house. So check them out at pacificprivatemoney.com. They also have funds that you can invest in if you're an investor, where they're paying as little as 6% and as high as upwards of 8 to 10%. So you can also find out more about that by checking them out at pacificprivatemoney.com. I've worked with them. Gosh, Mark Hanf and I started the show back in 2010. And we did the show for 3 years before we ever actually did any business together. And then I had been involved with Pacific Private Money since 2013. And they've done a very, very good job, been growing quite a bit. And I mean, I think they've done over $1 billion worth so far, over 2,000 loans. So they've been have very, very good reputation, easy to work with. In fact, it's interesting because they'll get referrals from banks, realtors, real estate mortgage companies, and accountants, attorneys, et cetera. It's kind of interesting because you think, well, isn't there competition there? Well, not really, because they're not doing the conventional loan, so they're not competing with the bank, but the bank will refer them because they don't want to lose the client. So a client walks in, needs a quick loan. Bank says, gee, we can't give you that fast a loan, but go to Pacific Private Money, get the money from them. And then after 3 months or 6 months or whatever you need, we have more time, then we will, as the bank, will refinance you out. So it's a very good hand-in-hand relationship. So anyway, that's pacificprivatemoney.com. And that was a good show with Spencer Scheer. He is quite the knowledgeable person, and his email is scheer, which is SSCHEER at scheerlawgroup.com. Now we're going to cut out, and here's our thoughts of the day. A man is great, not because he hasn't failed. A man is great because failure hasn't stopped him. And you know who said that? Confucius. And I don't know if you heard, but the CEO of IKEA was elected as president of Sweden. I hear he's still assembling his cabinet. But I'm bummed. Okay, no, seriously, he was not elected president of Sweden. So assembling his cabinet, I think you get the idea. All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. And our guest co-host again will be Patty Cohen, who is she works with Compass Realty. She's a quite knowledgeable realtor. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.